So this is going to be a run through of Liberty Media's most recently filed quarterly report. A quick introduction to Liberty Media. They are the holding company for an incredible amount of media and entertainment companies in the U.S. So they own and operate large holdings through three main segments. Liberty Sirius XM owns a large chunk of Sirius XM Radio, and through Sirius XM Radio, Liberty Media also owns portions of Pandora. Sirius XM bought out Pandora very recently, and Pandora and SoundCloud have also entered into strategic business alliances as well. So through Liberty Sirius XM, they own portions of SiriusXM, Pandora, and SoundCloud. Liberty Braves is one of the companies that holds a large chunk of Braves holdings, and they own through that Braves holdings ownership stake the Atlanta Braves. So if you wanted to ever consider trying to invest in a sports team, this is the way to do it. Liberty Braves is publicly traded on the ticker symbol BATR. A for the Series A, BATRB for the Series B, and BATRK for the Series K shares. Liberty Sirius XM trades on the LSXMA, B and K ticker symbols, respectively, for the Series A, B, and K shares, respectively, for Liberty Sirius Holdings. And Liberty Formula One also owns a large stake in Delta Topco, the parent company for Formula One racing, traded on the ticker symbol FWONA, B, and K, respectively, for the Series A, B, and K shares. The company also owns a large equity holding in Live Nation. So they own all of millennial media: SiriusXM, Pandora, SoundCloud, Live Nation for the concert goers and the people that like to go see live events, maybe go see their favorite comedians, or they buy tickets for maybe plays or theatrical performances and use Live Nation for that. Then they own a large chunk of the millennial media landscape going into COVID, and will more than likely continue to expand their company footprint during and after COVID. So there's going to be three main things I'm going to run through with this presentation. One is that this is a company that creates value, and I'll show that here in the spreadsheet that I calculated out for this company's main numbers. They do meet their cost of capital, and they return value to the company stakeholders through having a higher return on invested capital than their weighted average cost of capital. They are one of the large companies that is going to be caught in the center of the shifting media landscape, and COVID is acting as an accelerant for that shifting landscape as well. And I'm going to show how I think the company is going to be able to navigate the shifting media landscape through and after COVID-19. I think they're positioned rather powerfully for solid change in their industry, and are able to capture a lot of the benefits of that change. The third point will be that I think human nature kind of sides with the media industry a little bit, and they'll be able to benefit from that. That'll be at the end of my video. So let's run through how some of their companies make revenue. What do they actually do, and how do they actually make their money? Well, Sirius, they make money. So same with Pandora, they make money through selling ads and having subscriber revenue. Sirius and Pandora and SoundCloud all have subscriber premium editions. You can pay a monthly fee to listen to music without ads. Otherwise, you have to sit through ads that you just can't skip, and it's rather lucrative for some people to listen to all the music they want without being bothered by ads that are listening in to your everyday life. SiriusXM also sells equipment revenue. They also make equipment revenue, and that includes revenues and royalties from the sale of satellite radios, components, and accessories. Equipment revenue was flat most recently for this report. Was flat for the 3 months ended March 31st, 2020. An increase in royalty revenue was due to SiriusXM's transition to a new generation of chipsets, but that increase was offset by lower direct sales to consumers. So they actually sell the hardware. If you ever walked into a Best Buy, you may have seen the Sirius XM radios, and you can have them installed there at the Best Buy location. That's a chunk of their revenue as well. They sell these equipment, hardware to automakers. Dodge and General Motors are some of their large customers, and they sell that equipment to Dodge and GM to be installed in select models of cars, presumably the ones that are going to sell easily. And the automakers pay for that, and they also buy the subscriptions out to come with the vehicle as well. The other revenue also comes from service and advisory revenue from Sirius XM Canada, connected vehicle services, and ancillary revenue. It increased 8% for the past 3 months, ended March 31st, 2020. Pandora does the same thing, subscriber and selling ad revenue and selling ad spots and making ad revenue from selling those ad spots. Let's scroll down here to Formula One. Their Formula One Racing's revenue is primarily derived from the commercial exploitation and development of the World Championship through a combination of race promotion fees, broadcasting fees, and advertising and sponsorship fees. Their revenue dropped $185 million these past 3 months. There were no events during the 3 months ended March 31st, 2020. Only the elements of sponsorship contracts related to non-race related rights were recognized during the 3 months ended March 31st, 2020. No race promotion fees, nothing. So other Formula One revenue is generated from miscellaneous and ancillary sources primarily related to the facilitating of the shipment of cars and equipment to and from events outside Europe. This is essentially their European arm. This is the way that Liberty Media can get a large chunk of European sports revenue, because over there, Formula One racing is pretty big, and it's expected to grow over the next few years. I don't know how COVID messes with the potential growth rates for the spectator sport industry, but I will bring that up later on in the video. Other Formula One revenue during the 3 months ended March 31st, driven by 2 events and from the sale of the new Formula 3 chassis and other components to the series' competing teams at the start of the first season of the expected 3-year vehicle cycle started last year. So once again, they run through. They make their money by selling broadcasting rights. They make money through a combination of race promotion fees and advertising and sponsorship fees. They're a holding company, and they collect money from the teams that basically pay to participate. Braves Holdings is their wholly owned subsidiary that indirectly owns the Atlanta Braves and 6 minor league baseball clubs as well: the Gwinnett Stripers, Mississippi Braves, Rome Braves, Danville Braves, GCL Braves, and the Dominican Summer League. Due to COVID-19, Major League Baseball postponed the start of the 2020 season as of March 31st. It's uncertain whether the 2020 baseball season may begin at any such point, if fans will be allowed to attend. Their revenue comes from baseball. Once again, they just have a line here: baseball revenue derived from 3 primary sources: ballpark ops, ticket sales, concessions, corporate sales, suites, and premium seat fees, local broadcast rights and national broadcasts, licensing and other shared MLB revenue streams, and development revenue from the mixed-use facilities, and primarily includes rental income. So all the stands that are in the stadium that they own, primarily Truist, they charge rent for all of it. So that's a large portion of their revenue. And ticket sales are obviously the largest chunk of their revenue, which has more than likely bottomed down due to COVID-19, people asking for refunds, and games consistently being rescheduled, and will more than likely continue to be rescheduled going into 2021. The decrease in their operating expenses most recently was due to the postponement of the 2020 season and the subsequent delay in the recognition of player salaries. So COVID-19 is really giving everybody a headache right now in the sports field, and Liberty Media is one of the ways to see how it's been playing out publicly. Now, Liberty Media isn't the only way to invest in sports companies or sports teams. Madison Square Garden also trades publicly as MSGS and MSGE. They just spun off their sports teams arm into MSGE. MSGS used to be the large parent company. They spun off their ownership rights to the Knicks and the Rangers to MSGE. So if you wanted to invest in sports teams, Liberty Media and MSGE are going to be the way to primarily do that. Now, going internationally, the vast majority of publicly traded sports teams around the world tend to be European football teams, like Arsenal Holdings, Our House Elite, Brisbane Broncos, Lazio, the Sporting Club of Portugal. They all trade publicly. They're very small traded stocks, and most of the teams aren't really in all that good financial health, dictated by the health of their financial statements. A lot of them tend to be very levered, meaning a lot of debt. So they do great in great times. They make a lot of money when the teams are very successful. And during times like this, during COVID-19, it's a lot more worrisome for the financial structure of those sports teams. Now, COVID affects revenues rather heavily. So why does COVID affect revenues rather heavily? Sirius makes a large amount of revenue from their subscriptions, and cord cutting has been a thing more than likely recently due to layoffs, due to losing jobs, and maybe going on unemployment, or people being underemployed by taking part-time or temporary work. And so, people are trying to whittle down the luxurious expenses in order to more than likely save a lot of cash. And losing that $10.99 a month subscription fee to a Sirius XM is one of the ways to make a lot of money, or hold a lot of money, I should say. So now you have a larger problem here. Sirius XM here we go. On page Roman numeral 1-48, Sirius XM recently had 34.8 million subscribers as of the end of March. So right out of the gate, you're probably losing a lot of subscribers straight up to controlled costs, or consumers trying to control their own costs and saving for the economic headaches to come out of COVID. Braves games are public, as we all know. The spectator sports market has been hit heavily, and COVID has canceled MLB games for the foreseeable future. The All-Star game was recently canceled for this year, and in 2021, the Atlanta Braves are scheduled to have the All-Star game. So that's going to be a bit of an interesting thing to see if it plays out. If COVID is still a heavy thing in 2021, all these games might be completely canceled or rescheduled. So automatically, Braves won't be making any money off of ticket revenue or concessions, and a lot of the development revenue that they make through charging rent to the people in their stadiums and the lease owners for those sections in the stadiums that sell concessions and T-shirts and all the memorabilia and merchandising associated with baseball games and the experience pertaining to being at a live sporting event. All that revenue is more than likely going to drop off very soon if the games don't come back and money can be made. Formula One races scheduled to happen in Japan, Singapore, and Azerbaijan are canceled. So right at the gate again, Formula One has the same headache that the Braves do. Ticket revenue down, concession sales down. Broadcasting rights are going to be renegotiated between the Braves and for the Formula One racing group, because those media contracts tend to be calculated with a certain amount of viewers in mind as well. There's so many other variables associated with all that, but one of the larger variables is how many people that they know are going to see it. If there's decreased amount of people going to see it, these revenue contracts are going to be renegotiated. So advertising is going to be their advertising fees are going to be renegotiated. Broadcasting right prices are going to be renegotiated. This is the near future is going to be a big headache for Liberty Media, and to see how they play through it, I think is going to speak wonders of the company and the leadership of the company. Now, you also have further issues as well coming up with the Braves holdings specifically. An MLB potential players strike could hurt the Braves as a financial investment if you wanted to own Liberty Braves. The players union strike. It hurts a lot of sports like baseball and hockey as well. Baseball and hockey have not recovered from their last strikes. Now you have a bit of a problem here that they're already facing financial headaches from people not showing up to their games, and also recognizing that the players are willing to get up and go, and they're willing to fight a little bit to be paid what they believe they need to be paid for. Now you have a larger problem of a very unknown variable on top of COVID being an already unknown variable. Now the players don't want to show up. You're going to have a bit of an issue, a large issue, if the MLB and the players unions can't come to an agreement. Now, Formula One has, I think, equally large issues, but in their own way. Europe has been decimated by the strike, by the COVID-19 headache, has been utterly stuck. So it's going to be difficult to see how COVID deals with Formula One racing over in Europe and spectator sports for them overall. Now, this is going to be a bit of the more financial side, and this is going to be a bit more dry cut and boring for those of you that are interested in this kind of thing. I'm going to leave the spreadsheet that I have here up on the YouTube channel so that you can see it. You can edit it. You can do what you want to it. Comment, critique, teach me as I go. I know I'm getting a lot of this wrong. Show me where I'm going wrong, how I'm going wrong, why I'm wrong, and what I can do to be better at this stuff. And the company like this is very, very complicated. I can still feel the headache forming in the back of my skull right now, just looking at these numbers. But I'm not going to go through the nitty gritty. So what I'm going to show is kind of my bare bones thought process. So right out the gate, I think over the next few years, they're not going to be making as much money as they possibly could due to COVID, more than likely permanently dampening their revenue prospects. So right here, I have free cash flow. This entire segment here is discounting my free cash flow back to today's values. So if you wanted to buy a share of Liberty Braves or Liberty Formula One, you want to look at how much cash the company is actually making for your portion of the shares. For people that are just looking into finance and investing and wanting to make money in the markets, or just have enough money that your money works harder for you in the markets than you did for it, which is the whole goal of investing successfully, you want to look at free cash flow. That's what that's what the company gives you back for your share of your investment. Right now, COVID's dampening their prospects, at least as far as I've been able to calculate it out. Everything here is negative for the next 9 years, going into a terminal valuation, that I think they're going to stay negative for a very long time if COVID proves to be a much more damaging thing than we previously thought. Now, I'm going to move up here. I'm treating Liberty Braves and Liberty Formula One as riskier investments than Liberty Sirius XM. So I'm putting a higher risk premium, meaning I want to be compensated for a potential that my investment's going to be garbage. So I want at least 7% on this before I take the leap of faith. And that's pretty high. Liberty Sirius XM, I'll take a lower risk premium. Why? Because you can listen to radio in the confines of your own home or your own car, social distancing. So I think there's going to be a percentage of viewers that want Liberty Sirius XM. They view it as quality. They get to listen to some of their favorite programming. They probably get to listen to Bob and the Showgram or Bailey and Southside whenever they want. They get to have that little bit of comfort that they usually get during rush hour, to getting to work there and back again. They can get it through Sirius XM. I think there's going to be a stickiness to it that would demand a lower risk premium. So I'm willing to take a leap of faith on the company, a leap of informed faith, I should say, on the company at 6%. Liberty Braves, Liberty Formula One. I'm going to need to I want a little bit more for that. Why? Because I think spectator sports are going to be dampened in such a way that warrants me taking a larger leap of faith. It requires me to have a larger risk premium pertaining to that. I think some people are not going to come back to spectator sports for a very long time, and that's going to dampen revenue. If they're going to do social distancing in Truist or other stadiums and separate seats, that means they can't sell those tickets. That means they're going to have to take smaller cuts. That means Liberty Braves Holdings and Liberty Formula One, they're going to lose money to these companies that have to pay for more disposable gloves, hand sanitizer stations, social distancing through the seats, like I mentioned. Also, lower concessions because there can only be so many people in the area at one given time. And also businesses that they lease space to in the stadiums not coming back ever. So for me to take a leap of faith on them, I at least want a risk premium of 7%. I think this is a little bit fair regarding the circumstances. So this is for free cash flow. And right now I have it negative. This is my current projections of what the entire firm makes, what Liberty Braves makes as a whole, rather than just the equity portion. And I have it as a terminal value as positive. I think the company is going to end up surviving. But the most important part here that I want to look at is, does this company meet its cost of capital? Now, I did it two ways here because honestly, I kind of figured that I had to do it two ways. I took the average return on invested capital for the sum of the parts, and I took the collective sum of all three returns on invested capital for each segment. So I did the same thing for their weighted average cost of capital. I added all of them and then took the average in a separate way. So either way, they make their ROI, so they make their weighted average cost of capital, their return on invested capital is higher. It does not cost them more to survive than it would be to give you back your money on an investment. This company creates value for their shareholders, in my opinion. So now what does this end up looking like in terms of the future? Well, I think you're going to end up running into pent-up demand. I think you're going to end up running into people wanting to go back out. And I pulled up an article here from CNBC. Liberty Media chairman John Malone, a media mastermind and mogul of the industry, mentions here that there's undoubtedly going to be a hangover in terms of valuations, and like everything else, if this depression in valuation is excessive, it presents opportunity for those of us who believe in the longer term thesis that this is a good place to be. Live events. Greg Maffei, the president and CEO of Liberty Media, as well as the chairman of Live Nation, Sirius, and TripAdvisor, said the company has seen evidence that there's still demand for live events. And if you've been outside recently noticing that nobody's wearing masks or social distancing while they go back to their regular routine of going to their favorite restaurants, their favorite bars, their gyms. In my case, I'm not any better than this, but I do wear a mask when I have one. And mentioned that there are some Atlanta Braves ticket holders that have deferred tickets instead of asking for refunds. I think there's a large portion of people here that will just ask for their tickets to be honored, and it's good to see that the MLB is playing game here and saying, all right, we want you to go back, so we'll bend a little bit and honor your purchase commitment. Now, I think that pent-up demand is going to end up benefiting them. People are going to want to go out. There's still demand for social events in its entirety. Human beings are social by nature. I think the 2-week-long quiet leading into like the huge outbreak of people wanting to get out of quarantine and social distancing and closures to be done with has shown us that human nature hasn't changed and that we want to be near each other. We want to be within arm's length of one another. Now, I think the second big portion here is the leadership portion. And I think it shows here with the high return on invested capital. Can this company navigate through the crisis? Can the company navigate through coronavirus and come out stronger than it did going into this? Well, this is where leadership matters. And no one plans for COVID-19. No one plans for a global pandemic to just stop the economy for weeks on end, or even segments of it, let alone the entire US economy or worldwide economy at that. No one plans for this. Crisis makes leaders. Crisis creates leaders. Unfortunately, sometimes that's the only way you can find out whether people are leaders or not, when you put them in a position of serious pressure. Do I believe that this company can come through COVID-19? Because I think there might be good leadership. I think at least if they're willing to take hard stances and stands on spending money for cleaning public places aggressively, enforcing social distancing by closing off seats, therefore lowering ticket revenues and gate receipts, closing off certain public areas and limiting max attendance for their sporting events, if they're willing to kind of create the we're all in this together mentality to ensure safety and trust with their buying public, I think that's going to speak well of the leadership if they go that route and say, look, we get it. It's a trying and scary time, but we're there alongside you. I think Liberty Media can angle themselves very, very well if that is the stance that they take. Now, are they in growing markets pre-COVID? Was kind of the question I wanted to know. What were the growth prospects of the market that they were going into for this? Well, right out of the gate, the Formula One, the spectator sport market was expected to grow at least a CAGR, compounded annual growth rate, of 7.5% for the next few years. What portion of that is going to MLB? I don't know, because that portion is going to go between MLB, the NFL, the NBA, the NHL, MLS, and so many other sports, professional sporting venues, and all the other little sports as well that are competing for market share. But at least the MLB is expected to continue to grow. I don't think the growth prospects for the entirety of MLB or professional sports, professional spectator sports, is going to go away forever, but it will take time for them to come back. The F1, the global motorsports market, is expected to grow by a rate of 10% for the next few years rather easily. I don't think they're going anywhere for a long time as well. Although it will be very interesting to see if Europe is going to change forever due to COVID and how that changes the global motorsports prospects for the company. Do I see this as a lucrative investing opportunity? Quite honestly, possibly. I will not tell you what you should and should not do with your money, but I will be keeping an eye on this stock. But I think due to COVID and recent market volatility and headaches has kind of made it very difficult to try to figure out whether or not Liberty Media might be a solid opportunity for your money. So once again, I think I wanted to run through these 3 points one last time before I end this video. As shown here, they meet their cost of capital. They create value for their shareholders. Their sum return on invested capital is greater than the sum of their weighted average cost of capital. And I also took the average of it as well. Their average ROIC is greater than their average weighted average cost of capital. They create value, economic value, and I want to know that a company is doing that before I step in to buy a share. COVID sped up the media industry's need for change. The media industry was already changing due to new players like Amazon, Netflix, YouTube, Google, Alphabet, the parent company for Google, which owns YouTube, going in and changing things, and companies like Liberty Media having to deal with the shaking down the media that the media industry was going through. Now COVID's acting as an accelerant, so now they have to change faster. And I think the company might be able to navigate through that properly. And I think that they're also still on the popular side of human nature. People still want to be entertained. People will not want to stop seeing their favorite sports teams. People won't want to stop going out and being social. They won't want to stop being gregarious. They won't want to stop seeing other people. And I don't mean seeing other people in the sense of a video. I mean seeing other people face to face. Human nature hasn't changed. I think the sporting arena is going to be the best way to recognize that. We still want to know that we can have the communal moments that a company like Liberty Media provides, the sports experience, the media and entertainment experience that SiriusXM, Pandora, SoundCloud, and their Live Nation holdings allow us to share and enjoy. Thank you. Thank you for listening.